Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. This video is about answering some questions surrounding the certainty rate. A lot of my members want to know, what the heck is this thing down here? Okay. For my members, I send out an email every night, well, almost every night, Monday through Thursday, and usually I might try to send one out Sunday night, on my opinion about what is going to happen in the stock market, specifically the S&P 500, okay? So we're looking at the S&P 500 futures here, but one of my own custom indicators is called a certainty rate. That's this one right here, okay? I send them raw data in the form of a file, something similar to an Excel file, and they can look at it and analyze and do what they want with it. But one of the things, depending on what trading platform they're in, is they can import a script. I also create a script. This trading platform we're looking at here is called the TOS, or Thinkorswim platform, by TD Ameritrade. Okay, so they can import this script that just basically has raw data in it. Okay, and they get this indicator. It's these squiggly looking lines. Okay, and also I have a universe indicator. We'll just touch on this a little bit in this video, but mostly we're gonna talk about the certainty rate. Okay. So I have another indicator up here, Big Daddy Forecast, that's been around a long time. Very helpful, very good at finding peaks in the market. But we're not going to talk about that in this video. We're just going to talk about the certainty rate. Okay. So I've questions have come up. The certainty rate's probably been around for, I don't know, at least a few months, 6 months. I don't remember how long. Maybe even better part of a year. And I made some discoveries regarding some data that I thought would be useful in trading. So I created this indicator. Okay, what my members get and when they sign up to my service, which, by the way, if you want to sign up for my service, you can. First, subscribe to my YouTube channel, and then below this video, find a join button. You click the join button. It's $5.99. It is the El Cheapo of memberships. Okay, it's just ridiculously cheap. Okay, like I said, you get a nightly email. I occasionally put out some videos like this one, and the members get access to a Discord server, and I'm on there most days. Most days of the week, 4 or 5 days a week, I'm on there, and I give my opinions throughout the day and answer questions. Okay, so that's what you get for the $5.99. All right. Also, regarding the certainty rate that we're looking at here, and we're going to talk about this, also is available on the TradingView platform. So if you have TradingView, you can also get the script for that. That's included in the nightly email. Okay, so I've had several questions about this. Some people find the certainty rate. Most people say, "Oh, it's not useful. I don't know what to do with this data. It doesn't help me. They don't understand it." Specifically today, I had a member ask, how do you know when to make it? How do you use this to help you make a trade? Okay, great question. So we're going to go over 2 trades that I recently made. One was about $400 worth of profit in about 24 hours or less, and the other one was about $220 worth of profit, maybe. That was today. Okay. So about $650 in 2 days. Okay, really small positions. They were futures. I traded futures, the E-micro futures contracts. Okay. I won't get into the reason why my position size was small, because that's also a video for a different day. We're just going to talk about using the certainty rate. Okay, so here we go. Let's talk about this box of consolidation right here. These candlesticks right in here. Okay. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and maybe even 14 candlesticks. They're just make up this rectangle, right? I'm sure I'm not the only trader during these 14 excruciating days that watched the market just chop sideways, up and down and up and down and up and down. I know day traders, some day traders I know made some really good money in here. Okay, they just kept taking advantage of bouncing off this lower trend line. They would get to come down here, get close enough to it. They'd open up a position. It would run up. Even on a red day, you could see, right? Some of these red days actually were up before they came back down. It just depends on the day. I don't remember exactly all the price behaviors for each of these days. But that's basically what day traders did. Now, I do mostly swing trades. So that's what we're going to talk about, how I made some swing trades using the certainty rate. All right. So just a little context to understand flow, from a swing trader's perspective, and not a day. I don't really do much day trading. So I made about, I think it was like $1,800 here, a few days with a swing trade, and I think I made about $900 here. I missed this big red day because I was busy working my job. Okay, so about, whatever that is, $2,700 in a period of like a couple weeks here worth of trading, right? And then we got into this crazy, massive consolidation period. And I just didn't trade it. I just waited because, I've seen this before. I've been trading a long, long time, several decades, all different types of products. You name it, I've probably traded it. Even products that are not in the open market, like private equity. I've done everything. I've loaned money to businesses for people who wanted to. I took my own personal money and loaned it to people that I knew I could trust. And I had one guy I loaned money to. He bought a motorcycle, whatever. Just so you understand my background and how much I've been traded and invested in a variety of different things. Okay, so I've been doing this a long time. So anyway, back to this. I saw all this consolidation, and I'm like, I'm not going to trade this as a swing trader. I'm just going to relax. Okay, so how did I use the certainty trade coming out of this choppy area? Let's talk about that first trade because there's two trades that happened in here. Okay, so the certainty rate will generate data if the logic that's behind this data produces a number great 8 or higher. Okay, so let's just pick this day right here. Okay, let me find another one. Yeah, this one right here is fine. So for those who want to know what I'm looking at, you're going to look at this number down here, okay? Right in here. Right there. Okay, I'm going to hover over a candlestick and you're going to see that number change, right? See right there, it's 10.5, right? 10.5. The next day, 8.9. So it barely qualified. How did I come up with an 8 as a minimum? That's just a number I picked based on some analysis of data that could change in the future, but for now, 8 is kind of the minimum. The next day was another 10.5. The day after that was 0. Okay, the day after that was 10. The day after that was 0. The day after that was 8. 16.5. Okay, so from this candlestick here all the way over to this one, they were 8 and 10. They're just barely above that the minimum filter rate of 8. Okay. So what's the point I'm trying to make? Just at the beginning of this and getting started with the certainty rate, that I know that 8 through 10 has got my attention, but not necessarily enough to trade. Okay, everybody hear me? 8 through 10, just generally. This is not a rule. I'm just giving you how I came up with a trade that took place. You're going to see over here towards the end when I took a trade. I'm just giving you some context how I built up to get ready for a trade when I knew to take a trade. Okay. So I'm seeing here we got 8, we got 10s. It's all just kind of 8 and 10, right? I also can see as the days are going on, we just in this choppy zone. So I'm not in a hurry to make a trade. So this is not a swing traders type of setup. We don't trade in this kind of choppy stuff. Most swing traders just wait it out. Okay, so we're going along 8, 10, 8, 10, blah, blah, blah. Now look at this day right here. This day was 16.5. Now that day got my attention. When I saw that 16.5, I said, okay, that's a little bump above the 8 and 10 area. It's a nice little bump. Now I was paying attention to what was going on. I knew that the market was still in this sideways chop. All the way through here was still sideways chop. So did I make a trade because I saw that we had 16.5? No, I didn't make a trade just because the certainty rate told me 16.5. Why? Because chop is still going along, and we're below the 50-day. Sorry, let me erase that little dot. We're below the 50-day moving average. This blue line is a 50-day moving average. Why is that a big deal? Because I don't want to take long trades below the 50-day moving average. No, I'm not going to go into a reason why. Just many years, decades of trading. In this scenario, with this sideways chop, I'm not taking a long position below the 50-day moving average. It's too dangerous. So the 16.5 got my attention on that day, but I still knew that the environment we were in was choppy and going sideways, and it was kind of slowly lower highs is what we were getting. You notice that? Lower highs, but the highs at the top of the candlesticks were just kind of tracking sideways, kind of bouncing around. So I knew we were going up, but slowly. Okay, but we were stuck between the lower trend line. Okay, trend line got started over there. Trend line, we grabbed the bottom over there, this bottom, all the way up here, and we could see that we could pull between these 2 points, right? You can see it. There's a trend line here that could be drawn. Okay, so I knew that all of this stuff in here was trapped between the lower trend line and the 50-day moving average. It's just garbage. Other than day traders, this is just garbage zone. I'm not touching it. Okay. So the 16.5 got my attention on the certainty rate. Okay, again, down here. Okay, so why didn't I make a trade? Because just bear with me. I've had some people that watch my video and they get upset. Oh, you're so long-winded. Why don't you just get to the point? Don't watch the video. It's that simple. You could fast forward it. Hope you don't miss anything. It's that simple. If you don't like long-winded videos, go watch other people's videos. I'm not going to be offended. It's all good. No problem. Okay, so why didn't I make a trade at the 16.5? Because one, it was choppy. 2 was below the 50-day moving average, okay, and the MACD had not crossed over. It's about right. I'm just going to estimate where this is at. The MACD right here, this indicator, look at it. There's still a gap here. The MACD is pointing down. See, the crossover happens over here. See it? It's a very important indicator, the MACD. It's like granddaddy. Perhaps the most granddaddy of all indicators. It's very important. Okay, in this 12-26-9 configuration you're seeing here. So I knew the MACD was still going down. Now look at the short-term indicators. They're driving upwards. Look at them. My Big Daddy forecast, along with the Stochastic Momentum Index. These are not short-term. I'm sorry. They're more quick reacting indicators. They're pointing up. At the time that 16.8 came in, right? Draw the line. They're starting to drive up. They're going up, but the MACD is still going down. We've got chop, and that chop is between the lower trend line and the 50-day moving average. Okay? So at this point, the 16.9, okay, this here, at 16.9 on that day right there got my attention, but not enough to make a trade for all the reasons I just said. All right, so let's move forward. Go to the next day. The next day is a 9.9. Still chopping sideways through here. You know, at right around this time, through this whole week and a half, 2 weeks worth of chop, and there are other members that will testify to this. I told them I'm not going to take a long trade below the 50-day moving average. I repeated that in all the emails I'll send them out. I'm not going to take a long side trade below the 50-day moving average. Okay. So now we get a 0 in the certainty rate. Then we get another 0, 2 zeros in a row, and then bang. Look at that. On January 6th, we get a big green candlestick, and look at the certainty rate, 19.3. Now, just for the record, the certainty rate has nothing to do with financial markets. This indicator does not draw its data from anything financial. Okay? So it isn't just some reaction to candlesticks and data in the marketplace. So that was the day that really got my attention. 19.3 is a significant jump. Look at the previous day, 0. So 19.3 right there, right? On January 6th. The previous day was what? 0. The day before that, 0. So it went from 2 days to 0 and it jumped. Not an 8 or a 9 or even a 12, but it jumped from 0 to 19. That's a big jump in one day. It's big enough. And the high of the day got above the 50, which was the first time in 2 weeks probably, or a week and a half worth of trading here. It didn't, at the close, it came a little below it. But guess what? I knew right then and there when I saw this at 19.3 after 2 days of 0. Okay? And it nipped the 50-day moving average. It just got above it for the high of the day. Okay? And we're about right here. Look at the MACD starting to cross over. These guys are already, the quick reacting indicators, they already been driving up for quite a while. It just goes to show you got to be really careful not to over rely on just one indicator, because these indicators would have had you believe you should have placed a alongside trade way over here, and you might have done okay with it, maybe. But for swing trader, no. So at the end of this day, I placed a trade on this day right here. It was the opening for futures the night before, basically, okay? But basically, I placed a trade at the very beginning, the bottom of this candlestick. Now, most people right now today, if they looked at this candlestick, they'd say, you're nuts. Why would you trade that candlestick? That's the candlestick at the end of the day, not the beginning of the day. That candlestick started right about, let's see. It opened up at 3918.5, went all the way up to 3973. Okay, so I placed a trade on the futures market. Opened up the night before. I placed a trade basically right at the open, and I rode that all the way up to not to the tippy top high, but pretty close. And I closed the position for like $400 profit on that day. Okay, so that's scenario number one, or scenario number one. That's the first of 2 trades I'm going to show you. How I knew it was time to place a trade. The MACD was about to cross over. Just the quick reacting indicators were already long since pointing up. This candlestick got above the 50-day moving average for the high. I would have liked it better if it closed above it, but it didn't, but it was close enough. And for really strong confirmation, 2 days of 0 on the certainty rate, and then 19.3. That's a good, hard, nice, strong bounce on the certainty rate. So as you can see, it isn't just one thing. It isn't just, hey, how do you use the and only the certainty rate to make a trade? I don't use just the certainty rate. I look at a complete set of data. I actually look at more than the one I'm even talking about here. Some things are kind of a little bit behind the scenes, or not so much behind the scenes, but just my decades of knowledge. Okay. So yeah, the certainty rate, when it jumped from 2 days of 0 to 19.3, plus the other conditions that were going on in here, gave me a lot of confidence to place the trade right at the open. I don't care if this candlestick basically became like a, what do they call this? Not a hanging man. I forget what they call this type of candlestick. Okay. But that's an ugly looking candlestick. But it wasn't ugly throughout that day, and I made a lot of money on it because I had the confidence that it was going to be a positive day for trading, a long side trade. It turned out to be a great day. Now, what the certainty rate doesn't tell you is that because of my years of experience, that I knew on that day when the market was getting exhausted. I could sense it, and looking at the data and the way the price action was, I knew approximately kind of near the top where the day was getting exhausted, and I closed the position. Okay, there isn't going to be any, well, I shouldn't say there isn't any. There may be some indicators out there that help you see the market being exhausted on a given day. That I do believe that kind of indicator exists, but I'll let you do your own research on that. For me, I have a sense for it, and I know when to exit. Okay, so that's the first trade. Let's look at the second trade, which was today. This candlestick right here. Okay, that candlestick right there. I think I made about 220, 230. I had just two little E-micro contracts, and I traded that. Okay. So here we are. Here we are at 19.3. Again, I'm just looking at this number down here. 19.3 plus all the other information I talked about. I placed traded this day, made $400 approximately. The next day, we're back down to 11 on the certainty rate. See down there? Back down to 11. Nothing too exciting about 11. Certainly not a 19. And then the next day after that, it was a 10.7. Again, just kind of a low, barely above the filter rate for the certainty rate. So why was I confident about placing a trade right there and alongside trade and making a couple $100? Because by then the MACD was already rolled over. Right? I don't need to go to the certainty rate for every last little trade. I know the market looks strong. The MACD is rolling over. These guys are, you can see the gap beginning to occur in the MACD right there, right? The two lines are separating. Same thing here on the SMI. Okay. And this doesn't always happen, but the universe indicator was very strong. Very strong. Again, this has nothing to do with market data. These two indicators here, they don't track anything in the market. They're completely, the data that's collected to generate these indicators are completely removed from anything financing or markets or opinions or anything. But I could see that this is basically energy flow. Okay. And the energy flow that was coming in, this is the highest it's been in a long time. I mean, only other time it's been this high was back earlier in the year. So this is very high right now. So I didn't need to worry too much about, using the certainty rate to make this trade right here. I just saw, now that I've looked at the certainty rate for months, I'm used to seeing things like it's kind of a common pattern, though it doesn't always happen, is you get a 19.3 and then the subsequent few days sometimes will be like that. They'll get above the 8, but they'll just be kind of continuation. Right? The 11, another 11, a 10. Okay. So in this case, because of the MACD was looking pretty strong, crossing over, I felt like the certainty rates that we were getting were just a continuation of that 19.3. And even though the one thing I want to, okay, so that's how I made the second trade, okay? The second trade was less dependent on the certainty rate. Okay. The key point to take out all of this was that after all this chop, the certainty rate helped me with that 19.3 to know that this day right here was the last day that I wasn't going to trade, and the next day was going to be the first day that I did trade. It was the breakthrough day, if you will, after all this chop. And it was right. It was bang on right. The next day, the candlestick spiked way above the 50-day moving average. And since then, we've been above the 50-day moving average. Now, I knew we were approaching the top of this, the top trend line, so I kept there's not a lot of room here, right? There's a small amount of room above and below the 50-day moving average. Can you all see that? Look at this triangle. We're just like in the nose of this triangle. There's like almost no room left in here. This is your typical kind of wedge configuration for candlestick patterns. there's a lot of things here on this chart that I'm not even talking about because I'm just trying to stay focused on the certainty rate. A lot of traders, especially new traders, they just want this one thing to tell them how to make a lot of money, but that isn't the way it works in the real world. Lots of experience in trading over many, many years and paying attention to the details, that's what makes you a good trader and good risk management. So, truth be told, there's not a lot of room going on in here. Something's going to give real soon. It's either going to drive way up above this wedge, or it's going to kind of get up in here and peter out and come down into this cycle low here in the first 2 weeks of February. That's what this story's telling me right now. All right. So I hope that gives you, an idea of how I use the certainty rate in collaboration with other data to have the confidence after all that chop in there to know that this was the day to make the trade. Because I guarantee a lot of people had no idea whether or not after this candlestick, this big red green candlestick right here, whether they should place a trade. They probably just thought there was going to be more chop. But that certainty rate was one additional piece of data at 19.3, okay, on that day, at the close of that day. And I saw that 19.3 after 2 zeros. I'm like, oh yeah, this is it. Everything aligned. Okay, so if you're looking for something like, just tell me the basic equation to how you use the certainty rate. Is it always if it follows a zero, you go do this? No. If it's that, you do that? No, it's not that simple. Because trading is rarely that simple. Sometimes you get not lucky, but sometimes market conditions are such a way that things are really easy. But this was not easy. This was a whole lot of chop going sideways. And the certainty rate added that additional boost of confidence to help me make a decision to make a nice profitable trade right here. But in my case, I kept the position small on both these days here and here because I see that real estate in here is really tight. There's not a lot of room in here. So if you want to know what I'm doing right now, I'm placing no trade. I think this could go up to 4,000, maybe 460. It might peter out right now. I don't know. But I don't like the idea of trading right up against the upper trend line. I'm just going to chill. I'm a swing trader. I don't have to worry about it. I'm relaxed. I'm going to let this thing do its thing. My next trade will probably be when I see it's breaking down and I know for sure when it starts to give confirmation that it's rolling over down into the cycle low. How will I know that? The same way we just talked about how I knew at the end of this chop that this was the day to place the trade. It's going to be this very similar type of data that's going to help me, right? The fast reacting indicators are going to start looking like that. There's probably going to be something in the certainty rate, though not guarantee, but probably something in the certainty rate that's going to give me a spike, something that's going to kind of stand out. All right. The Big Daddy indicator, we might see what these are called divergence dots, which you notice every time we got divergence dots, things go down here. Well, that one didn't play out that way. This one kind of did. Okay. All right, so that's it. That's how this is just an example. There's a lot of variations that could play out here, but this is just one example of how I use the certainty rate to know how to place a trade coming out of all that nasty chop that lasted 2 weeks. All right. So I encourage you that if you're a member of mine or if you want to become a member, I already told you earlier in the video, you can subscribe and then join. Okay. But I encourage you, look at the data. It's the number plus the visual, right? You can take this data that comes in the emails, guys, for the members, and you can I think it's called Plotly. Go over to plotly.com. Okay, and you can plot this data. If you can't import that data into your own platform, I think it's called plotly.com if I remember right. And you can take that CSV data, okay, preferably bring it into Excel first. If you don't have Excel, you can get Apache. I think it's called Apache Office for free. Download it, and they have spreadsheets. And you can open up that data, that CSV file, the certainty rate CSV file. You get an email every night. And then you can take it over to Plotly and plot it in there. And it'll give you this same graph you're looking at here. It's it's important to look at both the numerical data like we did here in this video plus the graph. See this whole area of like flat zeros? See how it played out here? Look at this. What was this day right here? Look at that, 17.8, guys. We'll talk about one more trade real quick right here. This day right here, 17.8. Okay? Here's the thing. I don't have to, let me just erase this. I don't have to go look at the specific numbers. I placed a trade the very next day after this candlestick. I placed it on the beginning of this candlestick way here at the top. It opened up at 40.37. The low was 39.08. Okay, it dropped like, what is that, over 100 points in one day. I made a buku money on this candlestick right here. I shorted some futures and it made, like I said, I think I don't know if I made all 1,800 in that one day, but probably these 2 days. I made like over $1,000 on this one candlestick. Okay, I didn't have to go look at a bunch of numbers, though I probably did. All I did is I noticed that the certainty rate was kind of just plotting along low. It was 0 through all here. It was just kind of a little bit. And all of a sudden I got a spike. Got this big spike right here. Right there on that day, 17.8. I was in. I was in on as soon as this day closed, an hour later their futures opened. It was right near the top. I probably shorted like, I don't remember how many contracts, guys, whatever it was, doesn't matter, 2, 3, 4 contracts, micro contracts, and just wrote it out. Yeah, at that point also, the MACD had already crossed over way over here. And this is a typical kiss and reject on the MACD. Okay, I had some divergence dots on the SMI telling me divergence usually means the price is going to decline, but not always. So again, that was another scenario right there. Of course, it helped that this was right up against the upper trend line. Okay, that definitely made it a little bit easier. Okay, so there's some few examples of how I use the certainty rate in conjunction with other indicators. Okay, sometimes like in this scenario over here, the certainty rate was bang on in helping me know that we were coming out of consolidation. Okay, much harder, right? Figuring out how to come out of this consolidation and know to take a long side trade is much harder. This one was a lot easier. It bumped up against the upper trend line. The MACD was already telling me that things are going to go down. The certainty rate confirmed it. I mean, all the stars aligned on that one. That one was easy. This one was much harder. Okay, but in both cases, I use the certainty rate with other data to make the trade. Okay. So there's going to be other scenarios that play out with the certainty rate, guys. In this case, it turned out that there was 2 days of 0. And then we had a pretty big spike like into the teens, almost 20, and that really helped me make the trade the next day. Okay, that doesn't always mean that every time that's going to work for you on a trade. You have to be a critical thinker in life. You have to think critically. You have to. I've talked about this before a few months ago, but you have to be a critical thinker. You have to push your mind and go above and beyond if you want to be successful in life. That includes trading. Right? So there it is. All right, that's a video. I know it's a half-an-hour video, but I wanted to explain that. I wanted to use just basically a couple examples on how I use the certainty rate to place some very profitable trades. Again, if you want to subscribe to our YouTube channel, go ahead and hit the subscribe button. Give me a thumbs up. If you want to join as a member for $5.99, you can go ahead and do that. Also, you can go over, and I'll put it on the screen right here. You can go over to GetUsCharts.com. That's my new website. It's still being worked on, so it's just in its infancy stage, so just be patient. But you can register over there for free, okay? Because all the membership's going to be moved over to my new site, hopefully in the next few months, okay? So go over there and register for free. Okay, hope you enjoyed the video. I hope that those 2 or 3 examples helped you understand how the certainty rate works. Talk to you all real soon again next time.